Hi, good afternoon, everyone, and thank you for taking your precious lunchtime with us today. Warrants The ESG Way. Today, my name here is Amy. I'm from ECDG Maybank Investment Bank, and here with me also I have Amirah, who will be speaking later. So just to run through today on my session and what Amirah will be covering is that I'll be covering on more on the warrants part, whereas Amirah will be covering on more on the research on the Maybank's methodology and the equities under the Maybank ESG portfolio. So without further ado, I'll start off the session with a disclaimer first. So you can see the agenda for today is talking about ESG in general, what ESG is, and our Bursa itself, we have an index which is called, the short form is called F4GBM index, which I'll go through what it means, what are the warrants issued by Maybank Investment Bank that are over counters and companies that are listed or included as part of this F4G BM index. And of course, then the third session would be, if you are joining us for the first time, this might be quite new to you, but if you have joined our previous sessions, this might be a recap on how to learn how to navigate through the Maybank Warrants website to choose the warrants that suits your risk appetite. And last but not least, we would like to share with you your support buddies, what are the channels that you can look at to gain knowledge or start your warrants journey here in Maybank. So without further ado, the first session would be on an overview of what ESG is. So ESG means for environmental, social, and governance, in short form ESG, and you have seen this particular topic that has been wandering around in globally. So for example, when we're talking about environmental, it could be things like energy consumption, water usage. And when we talk about social, it can look at things where talent attraction, supply chain management, and of course governance then touches on remuneration, policies, and board governance. So this is just an overview of what ESG does stands for. But Bursa itself has an index where we have it called the FTSE for Good Bursa Malaysia Index. So this is how the FTSE for Good ESG model works. So as mentioned, how it works is that the FTSE Bursa will be screening from the EMAS index, and from there it will go through a ESG rating. So companies are assessed on material ESG risk, which is classified into 14 ESG themes and underpinned by more than 300 detailed qualitative and quantitative indicators. So from looking at the stocks that are listed on a part of the EMAS index, then it goes through this screening, and from this screening, it will then be appointed into the FTSE for Good Bursa Malaysia Index, which in short form calls for F4GBM. And also recently, it also has a new index where we call the FTSE for Good Bursa Malaysia Sharia Index. So the constituents from the F4GBM are then accessed on Sharia principles according to the Securities Commission Malaysia Sharia Advisory Council. And from there, it will then be included as part of the Sharia Index. So this was launched in the FTSE for Good index was actually launched in December 2014, and it measures the performance of public listed companies demonstrating strong environmental, social, and governance practices, in short form ESG. The F4G BM index constituents are drawn from the companies, as mentioned previous slide, from the EMAS index, comprising of the public listed companies from across the small, medium, and even large market capitalization segments. So to be included in the index, companies, of course, need to meet certain criteria, a variety of ESG inclusion criteria, which is consistent with the global ESG model that FTSE has developed and draw strongly from leading global disclosure frameworks such as the Global Reporting Initiative, GRI, and the Carbon Disclosure Project, CDP. So the benefits of inclusion in the FTSE for Good index and the FTSE for Good, the benefits of it is because it's regularly used by large mainstream institutional investors looking to meet an ESG mandate. So in addition, many companies use their inclusion in the index as a way to, show their commitment to having strong ESG performance. So the review period for this particular index is done semi-annually, June and December. And to be included as part of this index, it has to achieve a rating of 2.9 or higher from the FTSE Russell ESG ratings, in addition to passing certain additional screens. So as mentioned just now, these are the definition of the ratings, which ranges from 1 star to 4 stars. So to be included, as mentioned, it has to achieve a rating of 2.9 or higher. So as you can see, from 1 star, it basically tells you a bottom 25% by ESG ratings, top 51% which gets 2 star, and then the top 26 to 50% gets 3 star, and the top 25% gets 4 star. So based on its latest edition and its latest review in June 2022, there are 10 companies that has been included as part of the FTSE for Good Malaysia index, whereas 2 companies were eliminated from the FTSE for Good index due to these companies not being part of the EMAS index. So subsequently, this FTSE for Good index has constituents has increased from 80 to 87 during as compared to the previous review. So stocks that are included, stocks that are included in the EMAS have met the FTSE for Good criteria during the most recent review, while exclusion are due to because the counters has been deleted from the EMAS index. So as you can see here, the 10 new companies that has been included in this latest FTSE for Good edition are companies like Dialog, George Kang, Greatech, MPI, Paramount, Press Metal, even Sintex and SP Setia has been included in part of the FTSE for Good index. And as you can see from here, Dialog, companies such as Dialog, SP Setia, even Greatech has achieved a rating of 4 stars. So with that, I'll go through what in general, most of the index here and the FTSE for Good constituents are ranging from 13 sectors. So you have sectors from the financial services, healthcare, constructions, consumer products, and so on. So 49% of the total sectors are actually from the consumer products and services, financial services, technology, industrial products, and services sectors cumulatively. If you combine all of this, 49% of the whole constituents are from sectors, particularly on the financial and consumer product services. So with that as an overview, Maybank as well, after walking through the FTSE for Good index, let's take a look at some of the warrants issued by Maybank Investment Bank. So Maybank Investment Bank has been issuing warrants that are over companies that are part of the FTSE for Good index. But before we go through there, let me just run through with an overview of how the structured warrants market is. So out of 890 warrants listed on Bursa Malaysia as of now, as of 24th November, excluding warrants listed over indices. So I'm excluding in warrants such as over FAM KLCI or Hang Seng Index or even S&P 500. So if you're just taking warrants issued over individual underlying and stocks, Maybank still remains the top issuer with a total of 197 warrants listed, which takes into account about 22% of the whole total warrants listed on Bursa Malaysia. So out of that, 180 out of 197 warrants issued by Maybank, 181 are actually issued over Malaysian stock underlying, whereas 16 are issued over Hong Kong stock underlying. So for the purpose of this webinar and the purpose of FTSE for Good, we are excluding the Hong Kong underlying and we're only talking about the Malaysian stock underlying. So we have about 90 structured warrants issued over the FTSE for Good index constituents underlying, which means that 50% of our whole portfolio in Maybank, 50% of the total structured warrants issued by Maybank are over Malaysian stocks are actually constituents of the FTSE for Good. So with the new additions in June 2022, as I mentioned just now, with the 10 new additions, we actually also have a couple of warrants over those underlying. So with the essence of time, I would like to go through probably six type of warrants that we have that's over the new additions to the FTSE for Good. So you can see the first one that we have it here is Dialog Group, which is Dialog-C92. All of these warrants are fairly new and recently listed. So as you can see, the expiry date is until next year, which has ample time for investors to gain exposure to this particular underlying via structured warrants. So we have Dialog Group, Dialog-C92, Greytech C1, which is also the top traded Greytech structured warrants in the market today before the lunch break. And we also have the MPI-CY. Besides that, we also have Press Metal, which is the P Metal-C73, Syntex-CS, and we also have our recently listed SP Setia C58. So as you can see, most of our expiry date, as mentioned earlier on, until next year. So if you'd like to gain exposure to the underlying, but a leverage exposure, you may consider these warrants that have recently been listed. So some of you here today might have heard of it before, or perhaps, as I mentioned just now, when I talk about warrants, if you have joined our previous session before, this is probably a recap, but if you're new to it, then we'll run through briefly on how to choose the warrants based on a particular risk appetite that you have and the time horizon that you have. So before I dive into how do I choose a warrant, here is a quick recap for you and for the viewers here who have been to our other warrant session on the 5 reasons onto why investors trade structured warrants. So number 1 is a low capital outlay and your potential losses are limited to your cost of buying the warrants. Secondly, the opportunity to gain leverage exposure with no margin call. Third is to able to capitalize either on the upside or the downside of the market. So in short, you can capitalize whether it's a bull or bear market, there's always an option for you. And the fourth is, of course, local trading account. You can always gain exposure to the foreign markets, such as I mentioned just now, the Hong Kong market. And last but not least, there is a liquidity provider that makes it easier for investors like you to enter and exit your structured warrants position. So if I take into account a practical way of what I mean by lower capital, leverage, and liquidity. So as you can see, structured warrants are cost at a fraction of the underlying price, which means this provides you an avenue to gain exposure to the shares that you otherwise couldn't have bought with the same capital. So the underlying security may have cost a lot more even to buy a single lot. So with structured warrants, this gives you the exposure and leverage exposure to potentially gain more returns at a cheaper price. So you can see from here, this example that was taken on 25th November, just last week. If I'm looking at UEMS share itself, it's priced around 29.5 cents. However, if you want to gain exposure to UEMS Sunrise, there is warrants that are listed over UEMS Sunrise, which is UEMS-C81 and UEMS-C82. So you can see instead of 29.5 to 30 cents, the warrants cost 2.5 cents or even 10 cents. And the price changes, what we call the leverage changes, is also amplified. So you can see when UEMS increased about 9%, the warrant C81 increased about 25% and C82 increased about 40% over the same period of time. So this is what I meant by a lower capital and at the same time gaining leverage exposure with no margin call. At the same time, I would like to also talk about the liquidity provider. So if you look at the the red box that is that is over here on this slide, the buy queue and the sell queue. As you can see, as long as the market is open and during the market making hours, there is always a liquidity provider. For example, Maybank is the issuer of UEMS C81 and C82. So we are the liquidity provider for these warrants. So the reason is that we are there to place our buy and sell queue and our buy and sell prices in the market for investors like you to easily enter and exit your position. So even let's say, for example, if the warrants are not traded and you can see the traded volume is zero, you will notice that there is still a buy and sell queue and order this price over there in the your trading account, and that is because we as a liquidity provider are there during the market making hours for you to enter and exit your position. So with that, I would like to now go on to the next session, where is to how do you choose the warrants, since there's so many warrants listed in the market. Basically, the key terms to remember is just these three terms, which is sensitivity, effective gearing, and time value. So it may sound very technical and somewhat alien to you right now, but in simple terms, tick sensitivity means how fast your warrant moves, and effective gearing means how much your warrant moves, and time value generally just means how long your warrant lasts. Sensitivity measurement and effective gearing are publicly available on Maybank Warrant website, and ultimately for time value, you could always refer to the expiry date to know how long you're keen to hold onto your warrants. So an easier explanation, or rather tool that is commonly used when it comes to warrants and comes handy, is actually the live price matrix, which again, I'll explain towards the end of this session when I go through the website with you later on. So besides that, these are the three key terms to remember. So with so many warrants in the market, some warrants may have high effective gearing, warrants may have a shorter dated, some warrants may have a lower sensitivity, and so forth. So for that reason, it is important to recognize your investment style and horizon, time, and your risk appetite in order to know which warrants may suit you. So knowing who you are is always the most important part. And there are four key, I would say not key, but four common types of investor that you may think that you may be able to relate to. So the first one is what we call the risk taker. The second is a trend follower. The third is a day trader. And the last is the contrarian investor. So firstly, for risk takers' trading style goes for all or nothing. They are more towards a high risk, high reward sort of trading position. So the risk taker seeks for sharp event-driven movements in the share price, such as events such as before the earnings results coming out, or before maybe Bank Negara increases their interest rates. So this trade position is held for a very, very, very short term. So the size of the trade position is also sized in preparation for the maximum loss. So all or nothing, meaning I can gain a lot, but at the same time, I'm also willing and I'm okay to lose way more than the other type of investors. So the second one, the next up, is what we call the trend follower. So the trend follower will actually participate in an established share price trend, whether an uptrend or a downtrend, while anticipating a continuation of this particular trend. So the trend follower trading style looks to ride on the share price movement over the short to medium term to realize more predictable price patterns. The third one would be the day trader, which commonly known as the intraday traders, looking to for a very, very, very short term, or also looking to only hold for about 1 to 2 days. So the day trader's objective is ultimately to scalp for quick profits with a defined stop loss from the structured warrants that react to the intraday or short-term spikes in the underlying share. Whereas the last one is the contrarian investors, where they hold a view contrary to the expectation of the market. So for example, if let's say there is a trend that is going up, a bullish trend, so a contrarian investors might think that, that there is already the time that it might turn bearish, or it seeks to look at more oversold or beaten down shares or overbought or highly rallied shares in anticipation of a looming rebound or backup after a correction. So generally, they seek for shares that are on the lookout of a reversal. So contrary investors invest for a medium to slightly long term to watch their strategies play out and develop. So knowing who you are then comes to this part where what type of warrants may suit you. So once you have recognized your investment style and horizon, it's then to look at your risk appetite. So whether you are a risk-averse trader, you are a riskier trader, so that is very, very important. And that will determine how you choose the warrants that suits you. So following from the previous slide where there is 4 different types of investors, let's say, for example, let's take a risk-taker portfolio or risk-taker profile. So for a risk-taker profile, this type of investment style trader will usually look for structured warrants with the highest effective gearing due to its low warrant price. So gearing is a multiplying factor which symbolizes the amount of capital otherwise required for a structured warrant holder to gain the same exposure over the underlying. So a high gearing provides the risk taker even more leveraged exposure over the underlying share throughout the same period of time. So you notice that a high effective gearing, this means that if your warrant goes your way and your core warrant increases by, let's say, 10%, you have an effective gearing of 10 times, your core warrant increases by 10%, that also means that there is a potential that your core warrant would also fall by 10%. And usually this kind of warrants tend to have a very, very low sensitivity, meaning to say it needs the share to move way more in terms of the steps before you see a change in your warrant price. So this kind of warrants, besides being a risk taker, it's also for during the period where, for example, let's say you are anticipating a good corporate earnings results next week for a particular share, and you think that the earnings results will be very good, and you anticipate that there will be a sudden spike in the share price the moment that the earnings results are out. So you may want to take a position today looking at the higher effective gearing warrants, and when the results is out and it goes your way, then the percentage change will be much, much, much larger. But also note, as mentioned just now, the percentage drop will also be much larger. So next up, we have the trend follower. So this investment style or trader tends to go for structured warrant that generally have the lowest effective gearing. This is due to the fact that this type of structured warrants that a trend follower usually go for have the highest tick sensitivity, which tends to track the underlying share more closely compared to a lower tick sensitivity warrant. This means that your warrants moves faster. So for example, as soon as, let's say, your share move by 1 to 2 ticks, your warrant can already move by a tick. The third one we have is the day trader. So since the day trader usually go for intraday or short-term or 1 to 2 days trade position, the day trader tends to go for structured warrants with more moderate, so medium to high gearing to obtain the needed amount of leverage for its day trading position. Furthermore, the day trader will also look for structured warrants that are moderate sensitivity in order for them to realize the gains in a day. So the difference between the trend follower and the day trader is because the day trader don't particularly hold the warrants for long term, 1 to 2 days or within the day. So you don't want the warrants to move too fast, because if it moves too fast, it might not be able to capture that position, because then if it doesn't go your way and it moves too fast below, then you might recognize your losses even faster. So with moderate sensitivity, underlying share price can swing, let's say, 5 to 10 cents. And if, let's say, the warrants has a sensitivity ticks of 5 ticks in a day, so it allows the intraday trader to actually trade within this certain range. So that is more towards the day trader kind of style. And last but not least, we have the contrarian investor. So the investor goes for the opposite trade of what the market is expecting. So in short, contrary investors seize opportunity contrary to the trend or the popular belief that is happening right now in the market. So they typically will look for structured warrants with a low to medium gearing along with medium sensitivity. So it's similar to a day trader, but the only difference is that they tend to look for longer dated compared to a day trader. So for a day trader, expiry date might not be a concern to them because they don't intend to hold. But for contrary investors, they might tend to look at a more longer time to maturity warrants. A further expiry date is because this style of investment tends to be in nature allows these investors to develop a trend in the price that is close to the underlying share for a longer period of time. So basically, overall, there is no right or wrong into which kind of warrants is a good warrant or a bad warrant, because eventually it all depends on your time horizon, your risk appetite, and the type of investment style that you are. And as you know, there are so many warrants in the market right now. So for Maybank as well, we do issue a few warrants over the same underlying. And this is because to cater to investors like you that has a different kind of investment style. So with that, you can actually look at all the sensitivity, effective gearing, and even expiry date on the Maybank Warrants website that is available publicly, which is warrants.maybanktoyou.com.my. So practically with that, when you're on the website, for example, let's look at Greytech. Assuming there are approximately 7 warrants over Greytech listed in the market right now, which one or which may suit your risk appetite? So what we like to do is round of elimination. So personally, I will look at warrants that have more than 1 to 2 months until it expires. So you can see out of all the 7 warrants here, okay, there are most of them are about 2 months or more until expiry. So in this case, you can see that when I look at this, probably C1 and CW might be my elimination. But if I look at the current market right now, where Greytech, let's say, for example, the share price is around 4 ringgit and 56 cents as of this morning, 10:50 a.m., I will tend to look for warrants that are closer, that has an expiry, has an exercise price that probably is closer to 4 ringgit and 50 cents. So if you boil down to that, then you look at the issuer which has a live matrix. So Maybank does have a live matrix available. So in this case, I will just be looking at C1 and -CW because the exercise price is lower than 4.56. That means that the warrants tend to be more sensitive to the movement of the underlying share. But within the C1 and CW, then it comes to which one should I choose. So if I refer to the previous graph where depends on your investment style. So if you're someone who is more a risk taker, then you may consider looking at the CW as compared to the C1. But if you're someone who will look to warrants that are more responsive, then C1 might be the warrants that you intend to look at. So in short, at the end of the day is if you still think there is a bullish view on Greytech and would like to gain a leverage exposure, then you may consider the Greytech core warrants that are listed here. And this is just a historical price performance that was taken off from the Maybank Warrants website. So you can see from CW, the 6 months performance, you can see that at the end of the day, we do not want to end up with a warrant that does not move even though the share has already moved a lot. So even a warrant is so cheap, it still is our money, and it still boils down to looking at a warrant that has sensitivity that actually moves. So for example, here for the CW, you can see that the warrants have already moved a lot as compared to the share, which is the leverage exposure that we have mentioned about as one of the key reasons that investors look at structured warrants. So the next one, this will be my last example. Just to recap, we also have SP Satir, a lot of SP Satir warrants that's available in the market right now. So you can see you have SP Satir C47, C52, C58, even CHC that is listed by Maybank. So the difference between H and C is one is a put warrant and one is a call warrant. So as I mentioned earlier on that warrants allow you to capitalize either on the downside or the upside of the market. So if you are bearish about SP Setia moving forward, you may want to consider the HC. But if you are bullish about SP Setia moving forward, then you have C47, C52, and C58 to choose from. But from 47, C52, and C58, you notice that 47 expires next month, which is less than a month. So as I mentioned just now, round of elimination, if it's 1 to 2 months, you may not want to look at it. So in that case, personally, I would just eliminate and draw down back to C52 and C58. So in this case, both has similar sensitivity. One moves 1.8, one moves 1.9. Then it boils down to whether you are willing to take more risk. So you may consider either C52 if you're riskier, because it has an effective gearing of 4.1 times. Because remember to note that even if things go your way, yes, it can go up by 4.1% for every 1% change in your underlying price. But if it doesn't pan out your way, it can fall by 4.1% as well. And so if you're a riskier person, willing to take risks, you may consider the C52. But if you prefer to be less risky and you prefer to still gain exposure to SP Setia, you may look at the C58, which also is recently listed. So this is just the price performance. As you can see, around November, beginning of November, the share price has increased a little bit. And you can see that there has been an uptrend since the early November, up until 29 November yesterday. So if you have gotten the SP Setia warrants, for example, here C52, you may have seen some gains already as of yesterday. So this is another warrant tool that is this is a warrant tool that I mentioned earlier on that is very, very important, and is an essential tool when comparing the warrants that you're keen to look at. So for example, like just now, Greytech and even SP Setia, if you have two warrants that you want to look at over the same underlying, you can always use the warrant tools. So for example here, both are tracking Hibiscus Petroleum. So by placing the matrix side by side, it may paint a better view on how the warrant prices move in accordance to the movement. So just a week ago on 22nd November, Hibiscus Petroleum announced its earnings results. So let's say if you wanted to capitalize on the earnings results before the announcement, or you had a view that Hibiscus shares are bullish. So between these two Hibiscus warrants, which would be your choice? So the matrix here would be able to assist in your decision making. So if you believe that there will be a sudden surge in the share prices, then you may look at the C35. As you can see, the sensitivity of 6.2 ticks, that means that Hibiscus share prices would need to move more steps as compared to C42. So for example, say if Hibiscus share price is at 1 ringgit 10 cent to 1 ringgit and 11 cents, you would buy C42 at 9 cents, whereas you will buy C35 at 2 cents. However, as soon as Hibiscus share price increased to 1 ringgit 15 cents, you may sell C42 at 9.5 cents, but C35 is still at 2 cents. So you need to wait for Hibiscus share price to increase to 1 ringgit and 19 cents before you can sell your C35 at 2.5 cents. So ultimately, it depends on your view of the share, as mentioned, that warrants always tracks the performance of the mother share. So at the end of the day, these are the two examples that you can use as compare side by side for your matrix. So besides that, if you're new to warrants or you're still not familiar and you still want to get a hang of warrants, you can always join our Telegram channel, because every morning, the team will be there to post what are the warrants you may look at or you may consider if you think that your view is bullish or bearish for a particular share or particular stocks. And also the tools that I shared just now are all available on the Warrants website, which is warrants.maybanktoyou.com.my. And before I pass it on to Amirah, I'd just like to let everyone know that we are also running a campaign, ongoing campaign, which is an Invest and Win campaign, where you buy a minimum of 10,000 cumulatively worth of structured warrants issued by Maybank IB within the campaign period and stand a chance to be in the lucky draw pool. So you get an additional entry for every subsequent 5,000 ringgit bought. So all these steps are written and are posted on our Telegram channel. If you'd like to know more about it, do head on to our Telegram channel. You stand a chance to win either an Apple Watch Ultra or an iPhone 14 Pro. So the campaign has been ongoing since October and until 16 December. So you have about 2 more weeks plus before the end of this campaign. But even said that, besides the campaign, you can always get a hang of what warrants is, monitor the warrants that we post every morning before you start investing in warrants if you have interest in warrants. So without further ado, I think that is all from my session. And I would like to pass it on to Amirah, who will be walking through with us on the ESG methodology, where Maybank has the methodology on the ESG equities as well. So Amirah, I'll pass the floor to you.
Okay, thanks, Amy. One sec, let me share my screen first. Okay, all right, so we shall start. Okay, for my session, I'll touch more on the equity side, comparing the performance of these ESG related companies. All right, so let's just go ahead and start. Okay, so this, I believe, just a little background on ESG, which I believe Amy has covered mainly. So ESG, as you all know, it stands for environment, social, and governance. So in recent years, there has been a tremendous development and growth across the sustainability ecosystem worldwide. So what is pushing this is really by the pressing sustainable issues such as climate change, biodiversity loss, pollution, human rights. So there is an increasing demand from various stakeholders for better sustainability or ESG practices, as well as disclosure by businesses. Another point to highlight is even the COVID-19 pandemic has brought to light some of the ramifications of poorly managed sustainability risks to overall business resilience and economic growth. So it is a trend. Investors are now contemplating to avoid high and severe ESG risk rated companies, and they are moving to low ESG risk rated companies, or they are capitalizing more on investment opportunities that mitigate this ESG risk. All right, so as more and more investors, especially institution investors, adopt to this responsible investing, it is very crucial for companies to manage their economic, environmental, and social impacts. This is also to enhance their business resilience and performance. All right, so this chart, just to give you a gauge as to the value of asset under management that are moving towards ESG investing. The exponential rise in PRI signatories indicates that ESG interest is growing, as you can see. However, the ASEAN region, and even Asia in general, we are still in a nascent stage if we compare to the EU as well as the US. So PRI, Principle for Responsible Investment. So just a little bit of a background, who they are. Basically, they are established in 2006. So they are a body supported by the UN. They are not part of the UN, but they are supported by the UN, and is one of the key responsible investor proponents. So they, when I say signatories, as you can see this previous chart just now, so the number of signatories. What are signatories? So just to give you an example, like in Malaysia, some of the notable investor signatories include EPF, QUAP, as well as Hazana. You know, they work together towards a common goal to understand the implication of ESG. All right, so okay, moving on. So this is, as mentioned by Amy just now, FTSE for good. So this is just to compare because a common question that we get from clients is it really worth it to move towards ESG? Like, how do you really compare? Did they actually do well? Why should I move to invest ESG investing? So this is a common question that we get from clients. So this is just a chart to show you, we compare the FTSE for good index. So as Amy mentioned just now, the constituents are I guess highly rated ESG companies. Then we compare to the FBMK LCI. So they have been this index have been continuously outperformed since April of 2020. All right, okay, moving on. So this just to show you the numbers of investing assets by region. As you can see, the number is growing. This is by region in their local currency. Sorry, excuse me. All right. So this is just to show you for every companies that we cover in Maybank Investment Bank. At the back pages of our research reports, we have this tear sheet. So which kind of explain the companies where they stand in their ESG position. If you are interested in knowing like what does the company do, what are their sustainable practices, all those sort of things. So we do actually include for all of the companies that we cover in Maybank IB. We have this at the back pages which you can refer to if you are very concerned with the ESG rating. So as you can see at the top part here is where we rate, we give them rating. I'll explain a little bit more on how we do the rating later. So this is basically what are the issues available, do they have any controls in place. Yeah, so you can have a look at that. All right, so methodology, what methodology do we use to rate these companies? Because as you know, it's not quantitative. We can't just put a number on it. So everybody will actually have their own methodology, and Bursa will have their own yeah. So what methodology does Maybank Research use is we use Sustainalytics risk ratings database. So who is Sustainalytics? So they are like another research house, an independent one. So they are a leading external ESG research and data provider that we partner with them for their ESG services that range from company-focused ESG rating reports all the way through to portfolio ESG and carbon analytics, because as you know, ESG is a very subjective topic. It's very hard to put a number on it. So that's why we partner with them because they, I guess, are a more expert in this area than we are. So we choose to partner with Sustainalytics. All right. So how do we rate the companies? How do we put a rating on their ESG rating? So we use 3 criteria. This is Sustainalytics criteria. So in order for a company to be rated low to medium ESG risk, so we use the ESG risk ratings, we use the controversy score, as well as the management quality rating. So in order for a company to be rated low to medium ESG risk company, they must score low to medium risk for the ESG ratings. No mention or only score 1 only in their controversy score, as well as they must score high, average to high in their management quality rating. So yeah, so that is how we rate our companies, whether or not they fall under low, medium, high ESG risk. So just to give you a background, Sustainalytics actually covers 475 companies in ASEAN 6 markets. Okay, hold on 1 minute. Okay, so they cover 475 companies in ASEAN, of which out of these 475 companies, 201 are covered by MIBG, but not all of these 201 are considered low to medium risk. Okay, I hope that kind of understands. So they cover 475 And out of those 475, 201 are actually covered by us. Okay, and out of this 201, only 86 companies actually are considered low to medium ESG risk companies. So 86 is the magic number. All right. Okay. So out of the 86 companies that are considered low to medium ESG risk companies, 88% are from Malaysia, followed by 88% are from Malaysia, Singapore, and Thailand, where only 6 companies are from Philippines, 3 from Indonesia, and 1 from Vietnam. Okay. All right. So this table actually shows you the performance of the returns. We measure the performance against the benchmark MSCI ASEAN index. So as you can see in this table, this is the Sustainalytics 475 companies that I mentioned just now, which not necessarily all are considered low to medium ESG risk. This 201 MIB coverage. So as you can see, if you compare the performance against the MSCI ASEAN index, there is outperformance over 1, 3, and 5 years on a market cap weighted basis. All right. Okay. So all right, moving on. All right, so this table, we are only focusing on Malaysia alone. The previous table was the company's performance, ASEAN companies' performance. All right, so Malaysia is a positive outlier in that when we compare it to the rest of ASEAN as flagged in the previous section, the 31 filtered Malaysian stock actually outperformed both the MSCI Malaysia Index as well as the overall MIBG coverage returns. Okay, so there is 30 companies under our coverage that are considered low to medium ESG risk, which is right here. This is their performance, 1, 3, 5 years. So if you compare to the MSCI Malaysia, they actually outperform. Okay, just to give you a gauge as to how the ESG companies actually perform when you compare to the MSCI. Okay. All right, so in our coverage, 30 companies actually satisfy all 3 Sustainalytics-based filter, the one that I mentioned just now, low controversy score, ESG risk rating, as well as management quality. All right, so as you can see, this is the 30 companies. So you see the list of stocks here, mainly are actually dominated by banks and financial services. There are 4 of them here. Other sectors that you see with significant representation in terms of number of companies are actually companies coming from the consumer discretionary industry, real estate, as well as technology. And if you look at this list as well, you would not see any plantation companies, as you would know. There are many ongoing environmental related issues. So it's actually very hard to put a high scoring on plantation companies. That's why they are not, when an investor that is interested in investing in ESG, we wouldn't necessarily recommend plantation companies. All right, so we have created a Malaysia ESG portfolio, which consists of 15 stocks. This is our recommended constituents. The first 10 are constitute of stocks which satisfy the they are considered the low to medium ESG risk companies. The first 10 at the top part here, the filtered stock, as well as the bottom 5. These bottom 5, MISC, RHB, Telecom, Gamuda, VTRUX, they don't really consider low to medium ESG risk companies when we use the Sustainalytics methodology. However, we just included them because as per our on-the-ground research assessment, they are showing positive momentum, and we are likely to see them to be rated low to medium ESG risk companies soon. So so we included them into our Malaysia ESG portfolio. These are the 15 stocks. So we're just backtesting our 15 ESG portfolio performance against the MICI performance. As you can see at the bottom here, 9.7, 3.7, 13.6 right here, they do outperform the MICI Malaysia in the past 1, 3, 5 years. So you can see they actually also, these 15 stocks also outperform our MIBG coverage, so they actually perform better, as well as they also perform better than the total companies that is covered by Sustainalytics. All right, so these are our recommended when investors ask us a recommended portfolio, ESG portfolio. These are the 15 stocks that we include in our portfolio. All right, so everything that I have mentioned today, it actually come from this report. We have issued ESG report, like thematic report since 2020. And we just updated, we just came out with a new one, more updated one, which was just published yesterday. This is the link to the report. So it's a very, very long report, but it's very, very thorough. Very technical, but if you go through it, you can understand more on the things I say, as well as the background on how Malaysia is actually doing in our ESG journey. All right, so that is all for the equity side. Okay, Taka, can I pass it back to you? Yeah.
Yep. Okay, thanks, Amirah, and thanks everyone for joining us in this afternoon session. I think due to the essence of time, we may not be taking any Q&A. But if you have any Q&A, feel free to drop us through our email, either on our Warrants website or our Maybank's website. So yeah, so basically in a nutshell, like what Amirah mentioned, we have covered all the ESG equities, and Maybank itself has a few portfolios in terms of the Malaysia portfolios and all the stocks that are included as part of that, and went through all the screening as well. And earlier on my session as well, we covered on the warrants and how the Maybank team, the Maybank warrants team is also highly looking into all the ESG related stocks when it comes to issuing warrants for investors to gain exposure to the ESG trend that is going on throughout globally in the market right now. So without further ado, thank you everyone for joining us again today, this afternoon session. Hope that you have a great lunch ahead, and we hope to see you soon in our other session that will be available when you follow us on our Telegram channel. So yeah, thank you so much, Amirah.
Thank you, everyone.
Thank you.